Hello, and welcome to this week's show. Thanks so much for joining us today. I'm your host, Trey Winowitz, and you're watching Right on the Money. Our goal for the show is to always equip you, the viewer, with accurate financial information so that you can make educated decisions for both you and your family. We've got a great show lined up for you today, so thanks for watching. We're going to be tackling some difficult financial questions, and we want to take some things that could be somewhat complicated and make them simple and easy to understand. So come on in and have some fun with us.
In the aftermath of Hurricane Katrina, Trey Winowitz was forced to move himself and his family over 600 miles north and begin his financial planning practice again, from scratch. Since then, Winowitz Financial has become a national success story, establishing itself as a trusted source for financial advice in and around East Tennessee. In return, Trey gives back to the community by sponsoring monthly educational workshops and annual charity events. He also hosts a weekly radio show informing and entertaining those in need of financial advice. So, if you'd like to understand more about today's challenging financial environment, if you'd like to overcome your current financial situation, and want to learn from someone with a track record of overcoming, stay tuned for some trusted financial advice that's right on the money.
Now let's get to our main topic, improving your credit score. Now we've all heard about credit scores before, but I bet some of you out there watching don't even know what your own personal score is today. Now let me tell you, if you don't, it's not a great place to be. Your credit score is a very important part of your overall financial picture, so you really should be keeping tabs on it. At Winowitz Financial, we know that people are worth far more than just a number. Still, a lot of folks, from your lender to your landlord, your insurer to employer, will define a person's character by a 3-digit score that reflects what's in your credit file. And to them, whether or not they're going to do business with you comes down to where you rank on this scale, which is based on a FICO score ranging from 300 to 850. Now, the source for this particular scale is John Olsheimer, the president of Credit.com Educational Services. And we all know how this works. The higher score indicates a lower credit risk to the lender. Here are the categories. 750 and up, you're golden, and you'll get the best interest rates on any loan. 710 to 750, though you're not quite a VIP, qualifying for competitive offers is really no problem. 650 to 710, approval is very easy, but platinum status is not likely. 580 to 650, you qualify for credit at subpar rates and so-so terms. But with interest rates at historical lows, you could save some money by refinancing. And finally, 580 and below. Brace for denial and any loan shark rates.
Time to pay up, Tron.
I think you have the wrong guy. Thanks.
It's a nice suit.
You too. So on today's show, we'll cover a list from one of our favorite websites, The Motley Fool. It talks about several things that you can do to improve your credit score in a matter of months. Of course, it's what's on the inside that really does matter most of the time. But in matters of credit, you really can't escape scrutiny. So, if you want to have a better credit score, the time to get it done is now. So if you're on the cusp of decent credit worthiness, take heed. You can improve your credit score in as few as 3 to 6 months, or even more quickly if you discover that some of the errors being reported aren't really your own. If your credit score is worse, credit repair could take about 12 months, though your actions will begin to positively affect your credit score in 30 to 60 days. So here are 9 tactics to help improve your credit score as soon as possible. Number 1 is concentrate on performance factors. Payment punctuality and credit use levels count for 65% of the scoring equation. That's why, even if you change nothing else, being an on-time, low-spending goody two-shoes for a while will do wonders for your reputation. The blow to your score for any 30 to 60-day late payments in the past year will begin to diminish after you mail the check and rectify your wrong. Recovering from a 90-day late payment, a ding that can be as damaging to your score as bankruptcy, will take a little bit longer, but it will fade to black eventually, particularly if your more recent payment habits are pristine. All right, now we've got to take a break, but I hope you can stay with us. It's going to be a great show. Stay tuned for more trusted advice that's right on the money, and I'll see you back in just a minute.
Executive Lending Group is a local independently owned mortgage company committed to providing you with high-quality financial services, as well as the lowest rates available in today's market. Chris Holgroff is a mortgage professional who will work with you one-on-one to ensure your mortgage is tailored to meet your specific financial needs. His 12 years of experience in the industry will help you find the right loan program at the lowest rate.
Call me anytime at 865-257-7777. We look forward to working with you.
Thanks so much for joining us. I'm Trey Winowitz and you're watching Right on the Money. If you're just tuning in, we're working through a list of 9 ways to improve your credit score. And before the break, we talked about making your payments on time. Number 2 on our list is this: keep balances low. Aim to use 35% or less of your credit line in order to avoid irritating lenders. Of course, if you really want to get on my good side, I'd love to see your debt levels at 0 for every billing cycle. Before any major loan application process like a mortgage, an auto loan, etc., get serious about paying down your debt. In this instance, usage of 10% or less is ideal. To keep balances low, postpone big purchases. Keep card use to a minimum and pay down as much debt as possible. Number 3, get more credit for your history. Don't close your old accounts, even if you never use them. Canceling lines of available credit hurts your credit utilization ratio. This is also known as your debt to available credit ratio. Instead, give lenders some good news to report instead of stagnancy by using old cards every 6 months to buy something small. Number 4, improve the looks of your limits. Are your lenders reporting accurate credit limits? If not, ask them to. You can also improve your credit ratio by asking your banks to up your credit limits, unless you think access to more money will go to your head and drive you on a shopping spree at the mall. If you do ask for more spending power, make sure the request won't require your credit to be re-pulled. This can trigger a hard inquiry, which can bring about a potential score reduction of at least 5 points if there's enough of those made within a 12-month period. Also, don't try to build creditworthiness by opening a home equity line of credit. This is a secured revolving account, which has little impact on your overall score. Number 5 is to attack unattractive debts. That means pay off no money down financing debts as soon as possible. These are not helpful to your credit score. Number 6 is deal with collection accounts. In a strange karmic twist, paying off debts that have been sent out to collections won't improve your credit score much. The biggest hit comes earlier from the charged-off debt designation, with one exception: if the payment lowers your outstanding debt. Try negotiating with the collection agency in writing to have them mark the account as paid as agreed, or ask them to remove it from a notation from your credit report entirely. Now we've got to take another break, but stick around for more trusted advice that's right on the money.
Are you planning for retirement? Which path should you take? How can you avoid mistakes? What about a second opinion? Get sound advice for today's market. Make sure your future is secure. With principal protection, reasonable returns, simplicity and safety, call Winowitz Financial today to schedule your complimentary financial review at 865-691-2433.
Thanks so much for joining us. I'm Trey Winowitz and you're watching Right on the Money. If you're just tuning in, we're talking about improving your credit score. Now, we've covered 6 tactics so far and we've got 3 more to go. Number 7 is watch the clock when rate shopping. The credit scoring system treats clusters of credit inquiries for mortgages and car loans as a hard single inquiry, as long as you contain your loan quote request within a 45-day period. However, some lenders still use the old FICO system, which allows a 2-week window of a safe harbor, so err on the conservative side when window shopping for a loan. Number 8, make sure that it's not a typo. Don't assume that a negative entry on your credit file is really your fault. Consumer watchdogs report that as many as 80% of credit reports contain errors, and a quarter of the time, those errors are significant enough to cause a FICO score drop of 50 points or more. So be sure to review your original records for all 3 major credit reporting agencies, Equifax, Experian, and TransUnion, by going to annualcreditreport.com. Since not all institutions consistently report activity to all 3 agencies. Number 9 is don't ruin a good thing. If you have good credit, the good news is keeping it that way won't require much more effort than what you've been doing to get there. Just continue to pay your bills on time, watch your spending, and don't monkey too much with what's clearly working. Doing so may actually lower your credit score. Finally, you may wonder why we didn't mention the time-honored tactic of piggybacking on someone else's already established good credit as an authorized user or a joint account holder. That's because this strategy has been abused in the past and is no longer a viable option. In other words, the bad guys ruined it for all of us. Still, even though you're on your own, following the rules above should have you earning your gold star all by yourself in no time. So there you have it. Today we've laid out about 9 ways to help improve your credit score. Most of them are pretty basic, but I'm sure you've picked up a few things that could help you. Make sure you tell your friends about our show. They can watch all the shows on our website, TreyW.tv. Here at Right on the Money, we want you to be an educated consumer so you can make the best decisions for you and your family. Well, that's all the time we have for our Money Talk segment. Coming up after the break, we'll learn how people just like you benefited from a no-cost second opinion, so don't miss our Money Matters segment.
Are you looking to recruit and retain great employees? Would you like to reduce your retirement plan cost? Now you can offer employees the opportunity to keep their retirement funds protected and growing. Separate yourself from your competition. Make a difference in the retirement of your employees with little to no additional cost to you and no change to your TPA, payroll, or existing 401k company. Call Winowitz Financial today to find out more about this exciting new product.
I don't know about you, but what's been going on in the U.S. economy, and especially Europe, scares me. There are too many things that we can't control affecting our investments. We have to do our best to educate ourselves about the best options out there to protect our nest egg. The best way to do that is to call Winowitz Financial and reserve a seat at their next free educational workshop. There's usually a waiting list for these, so call today to reserve your seat. 691-2433. That's 691-2433.
Now that we're back, I'd like to tell you about some real-life folks that you may can relate to. Because it never hurts to have an extra pair of objective eyes take a look at your situation and see what can be improved. Even if strategies that you're using can't be improved on, sometimes people say it's a huge comfort when I tell them that what they're doing is working well, or maybe they should continue on the same path. However, in some cases, we discover that some of the products or strategies they thought worked a certain way actually don't. And sometimes not coming in can be very, very costly. If you'd like to be a part of our Money Matters segment, give us a call at the office and schedule a complimentary review. As you'll see, the names and vital information is kept completely confidential, but your situation might help others out in the future. So give me a call, and if you do get picked for the show, you get a Right on the Money prize pack. So let me introduce you to a few people who recently came in the office for a no-obligation second opinion, just to be sure. And these people were glad that they did. So let's take a look at this week's case. Hey, Janet, can you bring me my notes? Thank you, ma'am. This week's case study comes from Seymour, Tennessee. We have a 67-year-old retired military veteran and his 67-year-old wife, who's a retired lab tech. They came in just like you after watching some of our television shows, and then they also signed up and attended one of our monthly financial workshops. Main concerns, like most of us, they had looked at some of the CDs and were concerned with some of the low rates They had lived off some of the CD interest in the past. That wasn't able to happen with the cost of living. They also wanted to start planning because they had to start taking their RMDs, or their mandatory distributions, from their IRAs in just a few short years. They wanted to make sure they understood the rules and could do that properly. Also, they wanted some safer alternatives for their IRAs so they could make sure that those IRAs lasted them for the rest of their lives. Steps to success. We analyzed their current situation, shopped around for some other low-fee and no-fee alternatives. We were looking into some safer alternatives, and we also were looking into some things for their RMD accounts, their IRAs, that help them pass the money along to their grandkids, which was a main goal of theirs for the IRAs. Results. We actually were able to find some accounts that increased their returns almost 2% on some of the money that they had in CDs. So they were very, very pleased with that on their short-term money. Then we were able to show them how to use some market-linked products, CDs and annuities, to help increase their return while also keeping their IRAs safe. And lastly, we came up with a plan to use their RMDs in a couple of years that they were going to have to take to help leave their grandkids with some tax-free money for inheritance. So if RMDs are a concern to you, you're not sure what you need to do, how you need to take those, or maybe the most efficient alternative for that money once it comes out, give us a call, because this scenario could really help you out. Coming up next, another opportunity for you to be a part of the show. Post it on our Facebook, tweet us, or email us your financial questions, and stick around for the viewer mail section. Our first viewer mail question today is, if I claim my daughter as a dependent because she's a full-time college student, can she claim herself as a dependent when she files her tax return? Well, according to IRS.gov, if you claim your daughter as a dependent, she cannot claim herself on her own tax return. In this case, your daughter should check the box on her return indicating that someone else is claiming her as a dependent. Now, we have some CPAs that work for us and will help you all the time with questions just like these. So give me a call at the office. Most of the time, we can look through a couple of years of your last tax returns, then give the CPAs a call to come up with a specific answer for your particular case. Thanks a lot, and keep the questions coming. And our next question is, I'm 26 and recently married, and my wife and I are looking into purchasing our first home. Also, my best friend from college just got a job selling insurance. What kind of insurance do I need to buy, whole life or term? That's a great question, and having learned a lot about insurance companies over the past handful of years, it's a very common question for folks in your situation. Your needs can only be determined after meeting with a qualified professional, but I can kind of generalize based on the information that you've given me. It probably just makes sense in your case to get a low-cost guaranteed term insurance policy. There's other things that you could focus on in this stage of life, but I would probably look into that before looking into whole life if I were you. As a matter of fact, give me a call at the office and I'll send you a free copy of our DVD about our life insurance show, detailing the different options just to help you. Thanks a lot for our Facebook post. And our next question is, can I receive a tax refund if I'm currently making payments under an installment agreement or a payment plan for a prior year's federal taxes? Well, no. As a condition of your installment agreement, any refund due to you in future years is applied against the amount that you owe. The IRS will automatically apply that towards that refund towards the taxes owed. Now, we have CPAs in the office who help answer questions like these. Give us a call at the office. Most of the time, we can take a look at a few years of past tax returns and then give a call to the CPAs and help answer questions for your particular case. Thanks a lot for these questions. The question we have time for today is this. I'm 39 years old and my company matches up to 3% on my 401k. I was going to put in 6% to save more money. Is this a good idea? First of all, it's a great idea to put money into your company retirement plan, especially when they're giving you matching funds. Despite your age, whether you were 29 or 49, my advice would probably be the same. Fund the 401k up to the match, then look into start funding a Roth IRA. This is going to allow you to have some of your money accumulating on a tax-free basis. With our current financial situation, paying taxes now and looking into all the alternatives for after-tax money, I believe is a wise choice. There are many low-cost and no-fee options out there for accounts. Please give me a call if I could give you any help. Stick around after this short break for Right on the Street. See what some local people just like you think about the stock market and other financial topics. You may actually see someone that you know.
For the last few years, it's been harder to make a consistent return on your money. Are you paying too many fees? Could you get cheaper life insurance rates? Could you pay less taxes? Join the hundreds of others that have dramatically saved money using a free fee analysis. That means you've got to make sure your money is working efficiently for you. Call Winowitz Financial today, 691-2433. That's 691-2433, and start saving money today.
Are you planning for retirement? Which path should you take? How can you avoid mistakes? What about a second opinion? Get sound advice for today's market. Make sure your future is secure. With principal protection, reasonable returns, simplicity, and safety, call Winowitz Financial today to schedule your complimentary financial review at 865-691-2433.
Tell me what you do for a living.
I'm a realtor in Knoxville.
Okay. And real estate prices in general, are they low or are they high?
In general, probably since 2007, they've been lower than normal, but Knoxville really hasn't been hit like some of the other metropolitan cities, so we're doing okay.
Okay. If you're refinancing your house, with a mortgage, you have a certain interest rate you might be paying. How much lower would your interest rate need to be to make it good for you to refinance your house?
I don't know.
Okay. How much lower than their existing rate should someone's mortgage, or should the interest rates be if someone should refinance?
Oh gosh, I think it's like 2%, is that?
Okay, yeah, it's a common rule of thumb.
Yeah.
When do you think a good time to refinance a property or a house would be? What are some different reasons that people should refinance their home?
To lower their monthly payment. I don't know why else would do it.
Yeah, maybe to save some interest over the life of the loan.
Oh, sure.
Yeah?
Absolutely.
And would you say real estate's a good investment for someone to make?
Definitely.
Okay.
I still think real estate's a good investment, yes.
Refinancing your house, is it really expensive? In your opinion, you think it's really expensive to refinance your house?
Yeah.
Okay, it can be for sure.
A good time to borrow some money if you want to have a house.
All right, so let's talk about that because part of the show is going to be about refinancing. We're about a 40-year low in interest rates right now.
It's pretty unreal.
It is. What do you think someone should consider, or when's the time to consider refinancing their home or some property?
I think when you're not going to move for the next 2 or 3 years, when you're pretty settled where you're going to be for a while.
There's investments in rental properties right now.
Right.
There's still people flipping houses, buying them low, fixing them up. So there's still all around a lot of opportunities.
You think that'd be a good thing, maybe?
That'd be a good thing.
For the last few years, it's been harder to make a consistent return on your money. Are you paying too many fees? Could you get cheaper life insurance rates? Could you pay less taxes? Join the hundreds of others that have dramatically saved money using a free fee analysis. That means you've got to make sure your money is working efficiently for you. Call Winowitz Financial today, 691-2433. That's 691-2433, and start saving money today.
Are you planning for retirement? Which path should you take? How can you avoid mistakes? What about a second opinion? Get sound advice for today's market. Make sure your future is secure. With principal protection, reasonable returns, simplicity, and safety, call Winowitz Financial today to schedule your complimentary financial review at 865-691-2433.
And we're back. This is Right on the Money, and I'm Trey Winowitz. We're just getting ready to wrap up the show, but before we go, I'd like to tell you about an old Louisiana tradition called lagniappe. Lagniappe means to give someone a little something extra. And the way that we want to do that here at Right on the Money is to brighten your day at the end of our show. So with that, here's a little lagniappe for you. So 3 leading economists took a small plane into the wilderness to hunt moose over the weekend. The last thing the pilot said was, now remember, this is a really small plane and you can only bring 1 moose back. But of course, they all killed one, and come Sunday, they talked the pilot into letting them bring all 3 dead moose on board. So just after takeoff, the plane stalled and crashed. In the wreckage, one of the economists woke up and looked around. He said, "Where are we?" Another one quickly answered, "Oh, we're about 100 yards east of the place we were last year." The moral of the story is this: consistent bad economic advice gets you to the exact same place. And that, my friends, is a little lagniappe for today. I want to personally thank you for watching our show today. I hope you found our show helpful as well as a little bit entertaining. If there's anything at all I can help you with financially, please don't hesitate to call our office. And remember, any plan that we come up with will always have 3 main goals for your money. Safety first, or protection of your principal, is always number 1. Making a reasonable return on your money in what some would consider an unreasonable market. And number 3, keeping your plans simple and easy to understand. If that sounds like something you want, I know I can help you. Also, please keep the financial questions coming. We'll do our best to get them answered on the show. I'll see you next week at 3 o'clock for more trusted advice that's right on the money.